Time for the market report. Looks like a slight rebound this week.
Not only that, but this month's WASDE report dropped too, and we're going to talk about that. But first, the numbers. What were last week's biggest gains and losses? And then this month's WASDE report. What did it have to say? And finally, we sit down with MSU row crop economist Will Maples to talk about the WASDE's implications. So, markets closed last Friday on the upswing. Livestock all up while row crops slightly split. Let's take a look. Last week's biggest gain, live cattle up over 5 3/4 cents. That's a near 3 1/4% increase from the previous week. Last week's biggest losses, lumber and wheat, down $12 and 14 3/4 cents respectively. That's a 2.35% decrease each. This month's WASDE report dropped last week, a monthly domestic and global supply and production report released by the USDA. This one didn't make huge waves. We'll discuss that in a bit, but for now, here's what it said.
U.S. wheat supplies raised as production is up 17 million bushels from last month. Exports also up 25 million bushels. Ending stocks slightly down, but higher than last year. Global wheat supplies down 5.7 tons, largest reductions from Russia, Ukraine, and the EU, mostly due to weather issues. Consumption is down, mostly from less feed and residual use. Ending stocks lowered 1.3 million tons. U.S. corn outlook unchanged from last month. Global corn production up on increases for Ukraine and Zambia. Exports also up for those countries, while Russian exports down. Ending stocks down 1.5 million tons. U.S. rice supplies down due to less beginning stocks, while exports up. Ending stocks down, but still up 12% from last year. Global rice supplies raised due to higher stocks and crop size in India. Consumption is also higher as well. Trade raised along with ending stocks, mostly due to increases for India and the Philippines. U.S. soybean stocks up due to reduced crush and domestic use despite higher exports. The same applies to soybean oil. Global soybean beginning stocks are also up due to higher U.S. stocks offsetting lower stocks in Brazil and Paraguay. Due to this, global ending stocks are projected down a little over half a ton. U.S. beef production mostly unchanged. Pork production raised due to higher slaughter pace. Broiler and turkey production also up due to higher bird weight for broilers and hatchery data for turkeys. Egg production down due to bird flu, found in laying flocks. U.S. milk production unchanged from last month. Butter, cheese, whey, and non-fat dry milk prices raised due to recent price strength. U.S. cotton projections show higher stocks, while production, domestic use, and exports are unchanged. Global cotton production up 90,000 bales due to higher yield in Burma. Consumption up 80,000 bales as well, with largest increase in Vietnam and Burma. With reduced trade and consumption, ending stocks are up.
So now we have the context. What did the report really tell us? I spoke with MSU Extension row crop economist Will Maples to get his thoughts, and, well, according to him, this report validated what we suspected and so far hasn't moved the market needle.
So the June WASDE historically is usually not that surprising. No surprises come out of it, and this year it was kind of the same. They left corn exactly the same as the May report. The trade did expect to see maybe a bump in exports in the old crop because we've had some stronger corn exports recently. So that was a little bit surprised that they didn't adjust the export numbers on corn. But overall, not much new on the corn market. Soybeans side, we saw them adjust domestic crush for the old crop down 10 million bushels or so. So that drove up our ending stocks, just that lower demand coming into the new crop. But so a little bit bearish on soybeans. But outside of that, no huge changes from what we saw last month.
So what is the big news cotton-wise? Because, you know, this is Mississippi and we're a cotton country down here.
They did adjust cotton exports down in this report for the old crop. Cotton exports continue to struggle. This global economy's the demand for yarn, textiles, and apparel is still very sluggish. So we've been talking about cotton exports being down, the demand side of this equation for the last 6 months, and unfortunately it's still hanging down on the market going forward.
So overall, basically, this report didn't really tell us more than what we already knew. It was just a reiteration of what we already knew, and it's a holdover until next month.
Pretty much. So kind of next big report we get is going to be that June acreage report. Over the next few weeks, the market's going to be looking at the weather. So the outlook is for some pretty above average temperatures across the eastern half of the United States and parts of the Corn Belt. So kind of over the next few weeks, the market's going to be looking to see how long that heat hangs around. I mean, if it hangs around for 3 or 4 weeks at above average temps without much rain, we could potentially see some bit of a rally in those corn and soybean markets.
So, weather the big predictor in coming weeks, and we've got an idea of what that might be. According to the National Weather Service, it seems we're in for a heat wave, most of the U.S. affected, especially the Midwest and eastern U.S. One reason for this is the recent drought coming to an end due to the El Nino weather pattern transitioning into a La Nina. As we've reported, the drought caused a national cattle cull, and here in Mississippi, we lost many smaller ranchers. Time will tell if current weather will do the same.